The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting for Larry Pesavento, and pleased to hear that Larry is starting to improve a lot and hopes to be back soon. Now let's just go to this this market that we're looking at with the Dow up 98, S&P's up 14, the E-minis are 15.25. And most important in my work, let me just clarify for you what I'm looking at here based on the techniques that I use. You look for the low. The easiest thing to do, look for the lowest, most obvious low bar. In this case, in the E-minis, it's at 1803.25. That was back on the 14th, I believe it was. Always have to check for 14. Yep, 14th of April. Type it in for 14. And started to move up. In that move up, the easy part about this is that you identify each successively higher peak and you label them uppercase A, alphabetically all the way to G. But the idea is when you get to a D, that's where it doesn't have to happen, but that is where very often you get your longest pause or the deepest pullback. Now, when I look at it this way, you've got an A that started to be confirmed on the 24th of April. It went to 1882.50. The next day it had a lower high bar. So that makes a peak. The moment it comes back without breaking the low bar that it started at, which would be 1803.25, the moment it comes back and it goes to 1882.25, because the E-minis trade in 25-cent increments, it starts leg B. Well, it did that. It did that on the 1st of May, and then the 2nd of May, it went to a higher high at 1886.00, round number, pulls back to a trough D, and the way down we call them troughs, lowercase. And that trough D turned around on the 7th and went to a higher high today by going above that high of 1886. Today's high so far is 1889.75. But 1892.50 is really the basic target area. That's going to be the big test. So as I'm looking at it right now, I have a signal in my proprietary indicators that says there's a good chance, a 92% chance, that regardless of where the E-mini is overnight, how high it is or how high it is tomorrow morning, there will be a pullback with the Dow going negative. That's the whole indicator. Sometimes the indicators are based on the S&P. Sometimes it's not. In this case, it's based on the short-term trading index developed by Richard Arms, called the Arms Index. And I use it so that it affects the Dow, so that the Dow will go negative at some point, even if it's just by 1 point, but it could be more. But it goes negative, even though the futures are high. I think, oh man, I'm going to miss out. But what this indicator does, it gives you an opportunity to say, there's a chance, and a pretty good chance, that there will be a dip tomorrow. If I'm thinking of buying or if I want to go short, maybe this is not the time to go short, because this indicator says there should be a pullback before there's a rally, and a pullback before there's a successful rally. So it says maybe you should wait a little longer. Okay, so we're in leg C, and my methodology expect at least the last peak of consequence was on the 4th of April at 1892.50, where the E-minis turned around, and that was the top of some importance around here, because it gave you that technique that I've developed called the Chapman wave diagonal extension. And it went down in 3 days, A to B, and then C to D. That's not trough A or trough B. This is just the classic one-to-one measured move, gives you another one-to-one measured move. And I do it on time as well as price. That's the difference. Okay, so what we're looking at now is that the MACD is good. Not great, but it's good. The stochastic's still only at 70%, but the fast-moving average, that green line, is expanding, and that, to me, is really important. That is showing inner strength. When you look at the 120-minute bar, if in this particular 120-minute bar there isn't a new recovery high, above 1889.75, that makes it either a peak C, or if it touches that exact high and doesn't break above it, that continues leg C. You have to have a having a lower high ball. So that's what we're looking at. And just having a quick look to see just general questions, which most of them I've answered already. Okay, just checking that. So now this is very important to me. Because you've broken out in what I call a Chapman wave. Now, I just want to show you the chart. I'm looking at the 120-minute chart. If you're looking at Tiger TV, let me see how yep, that's pretty clear. On that left side, now I should have done it as a very even thing. I didn't. I got a little carried away. But basically, you always start at the low. That's the most important thing. So for a left side, right side price time, a technique that I've developed over the years, right there. It came in 1 bar early. It should have come in, technically, on the bar going 12 o'clock. Instead, it went to the bar going to 10 o'clock. In the 2-hour bar. That's very important because it shows strength. There's strength right now so that we've gone to a higher high. This is still leg C in the 120-minute chart of the E-minis. Maybe a little later in the day, by 3:30 or so, we're going to get some kind of a topping action with the leg D. I don't know, but in the meantime, this is what's called the Chapman wave. I'll type it in here. It's called. It's very important. It's the Chapman wave. Okay, yep. So it's the cup and ladle pattern. That's very different from a classical pattern to leg D. That's what's really, at least, that's what's really important about this. If you break out in this cup formation or a V formation in a shorter time span with very strong technicals, and you pass the left side lip, in this case peak D at 1884.75, made around about 11, I'll tell you the time right now, made at 12 o'clock on the 8th, and you power through it, that invariably says that should go to a D. So it's a very, the Chapman wave is the waveform that never sleeps, and in fact, what it is it's a forward-looking indicator. So that's its best use. So it says that we should still make a leg D. It's still very bullish at this particular point. Question, Basil, on the Dow Diamond template, you were expecting a pullback to Diamond 162, then we go up and end of May to 168 area to form, ending weekly D. You know what? I'm going to just leave that for now. Let me just see if I can do anything here. The diamonds in the daily trading in 166. Okay. What I'm anticipating is that when I get the sell signal, that the sell signal in the Dow diamonds and the Dow and the S&P and the other indexes see some kind of a pullback, but not a major pullback, just a pullback. And that pullback, in fact, should hold so that you then go to a leg D. And that all should occur in May. So when I was thinking earlier on, beginning of April, when I said, hey, there's a chance that the Frank Sinatra was, he sang the song called, the words were riding high in April, shot down in May. May could still see higher prices until at that kind of a top. So we'll see. Anyway, that's just a song. We'll look at the technical analysis of the 200-period moving average. That's always a very powerful indicator. It's like a springboard, that orangey line that you're looking at right now. So that's my scenario for Dow Diamonds. And in the pattern we're looking at, it is in leg D in the day. So, yeah, could the whole thing recycle? Certainly could. I just think, looking at many charts, that we're starting to get rather overboard. That's all. On a shorter term, and I have to say shorter term because if the weekly charts are still looking very strong, the intermediate term says we're getting high, even if there is a pullback. So, okay, I think I've got that out the way. Now, what I wanted to do is I wanted to spend a moment here because I know Larry always likes to look at, this is normally Larry's show, Larry likes to look at, let me do this. he likes to look at the bonds, and he likes to look at gold. So when I'm looking at bonds, I'm going to go to the continuous contract just for a moment to show you something. I believe that in the continuous contract, I don't have any evidence to, well, I shouldn't say I haven't got any evidence. There could be a spike. But the weight of evidence at this particular point is suggesting quite strongly that that was a peak F made on Friday when it confirmed a lower high bar in bonds on the daily continuous contract. If I go to the USM, which is the June contract, I have the same sort of thing, and it's gone above the up channel resistance, and that very often says you're going to come back inside the channel. Let me show you what I'm talking about. Inside the channel, and that means that it would still have to pierce the low of the day, which is at 1.5 and 9/30 seconds. If bonds tomorrow go under 135, there's a good chance that the low of this bar here of 2nd of May of 134.5 will be tested. Important moment here, both in the TLT and in bonds. And the reason being because the weekly chart is saying, let me show you something. The TLT has made a D, but it isn't a D theoretically. So let me tell you exactly what it is, and I'll tell you what my thinking is. Because the TLT is the 20-year Lehman T-bond fund, the 30-year continuous contract is something that has a very long history to it. Unfortunately, the history is shorter than it used to be. I used to go back to 1983 or something, but for some reason I don't get that data anymore. I don't know why they've shortened it. I can't get back to it. I had beautiful channels. I had it all notated the works. However, the up channel, 28-year up channel is still intact. And what's important about this is that the weekly chart says that there's an F/B. I'm keeping it that way because the MACD is still good and the stochastic's still at 88%, but the on-balance volume says be a little careful here because bonds could start to pull back. And if I'm looking at the TYX, and that is the 30-year Treasury bond interest rate, that made a peak F top, a double top, back at 39.76, 39.74. Yep, a double top. Back on, I think it was December. Was it January? December the 6th. That's the week of December the 6th. And has pulled back since with a very nice bounce this week, but it's just a bounce. And the big resistance in the TYX, that's the yield. I'm talking about the yield coming down, has 35.07. Let me just double check if I'm reading that correctly. Yeah, 35.07 as the level to pierce. And that's the same pattern that we're looking at for so long, is the H's that turn into M's. So it's saying that bonds, the yield might in fact come most of the move just for now, and we're going to see where it bounces to and where bonds have support. I'll be right back. Sure, this Basil Chapman sitting in for Larry Pesavento. We'll look at the yen and the question in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, Visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I'm Basil Chapman sitting in for Larry Pesavento. We've got the Dow up 102, S&P's up almost 16. What's really important is the FXYs. There are so many charts that are not that important to the general market, that are just doing this fuzzy kind of H that goes to a lowercase h that goes to an M pattern, just stuck in a trading range, really not doing much. Great trading vehicles intraday or just 2 days, and then you get out, move up, move down, and then just, I call them dartfish days, where not much happens, and there's a sudden move, but it looks, oh, I love it. The dartfish day is the day where usually it forms in a rectangle formation, and the price moves and it stops, and it moves and it stops. And then you think it's just about to break the rectangle high, and then it reverses. And every time you think it's a breakout, if you trade it as a breakout, you are wrong, because you've got to trade it as a reversal pattern. And when it gets to the bottom, you trade it as if it's going to break down, and instead it goes back into the rectangle. Dartfish day. And for many of these currencies, dartfish day, but sometimes it's a bigger move, sometimes a smaller move, but all stuck like the dollar. Look at the dollar. The dollars are stuck. There's a little trading pattern. It expanded it, but it's basically back in the larger rectangle formation. So until you get some move of significance, and in this case we were looking at the FXY, I don't see anything yet in the FXY other than this. There is a higher support level from the recent pullback, but it couldn't hold it today. Should not have been a down session. At 795.52, down 28 cents, down 0.29%. Should have been right up there. Should have been at 96, not 95.52. Should be 96.20, tackling the high of 96.15, the high of the 8th. It should be up above that right now for another leg up. Leg C in the little mini buy signal, but to buy mode. Instead, it's not. So, right. Now, so that was that. In my work, I've put a tremendous amount of emphasis on the volatility index. Why? I make it real simple. I like to make all these indicators just, it either works or it doesn't. You want to get intellectual. You want to start thinking about doing something with them that they normally don't do. It'll turn around and bite you. Just keep it as simple as possible. And I hope I'm keeping it simple by saying that until the VIX breaks out from this downtrend line, which I've just drawn, if you're looking at Tiger TV, you'll see it right there. Let me just see it. Yep, there it is. You'll see it right there. And this is the daily chart. So this one I can make a little bit more narrow there. Are we about to make another cup formation like this, which says 1188 is the most recent low of significance that we hit today? Bouncing off a little bit, it's at 1223. But here's the chart of absolute importance that I've spent a lot of time on, and I've discussed it in terms of this week, that's the week we're in right now, needed to see the volatility index popping right back into the above 1369, into the 14s actually, for there to be the kind of selling pressure that would say, okay, now we've got at least a short-term sell signal. So this break to this trend line support right here, which it is just touching right now. In fact, to put it purely technically, it's gone below. In the week 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, in the 14th week since that peak B minus top, that was a 17 bar move to the upside of 21.48 the week of the 7th of February. This is really saying, hey, wait a minute, what are you even thinking, folks? Because this is a support line, but it's a weekly chart. And my eye says what we have to be watching for this week is one of two things. Either we're going to break under 1188 and go into the around about 1150 to 1130, which would be really positive. Or at some point this week, there's going to be a reversal, and that by Friday, options expiration close, there's a sudden bounce. That's kind of where I'm leaning, but leaning is not actually trading, because in my opening call, it's my daily service with a very, very informative price points look at the Qs there, the GLD, the Dimes, the SPY, the Dow, the S&P, just oodles of things, dollar, giving you at least the trend or an important level to hold. As I said, 111.30s in the TLT. It's going to be very important support coming in for the next few days. Now you've got this trend line in the weekly chart. Let me open this trend line to show you this chart to show you something really important. Look at this. You've had a constant spike with the cup formation going back into that area. All of a sudden, you're extending out a little bit longer. I'll talk about it more when we get back. The volatility index this week is going to be really important. I'll be back. Basil Chapman sitting for Larry Bisbento.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Everyone, a question to Dennis. A way of telling whether we can go to the 1105 area on the VIX, what would be the indication? Well, let me just tell you what I would normally do. I'd grab the last low of significance over here. That's 12.52, and I draw all the way to C right there. Then I click on, so that'll be, let's call it green for now. Then I click on new parallel and make that a different color. Let's make that pink and make it dashed line like that. And I'll join it to this. So let's see what's happening here. Okay, so that's too far. That's interesting. All right, so, that's the full cup. All right, no, I can't do that. So that's not good. So it has to go to the low bar right there, 11.82. Good. If it goes to 11.82, we can go to the left, match it up, and see whether we get some kind of a price time implication. Right there. Let's move this to the right. Folks, all I'm doing is trying to get a measured move with a chance of time. Yes. Oh, time says this week, it's a daily chart. So it's within a couple of days. So far that's saying we are within a few days in time of at least testing the low 11s, and that's going to be really important. So we've extended it by a day so far. Okay. So the answer is I would rather do it the other way around. And the other way around says that in the SPX.X, I'm using the S&P for example, we've got a leg C. There has to be a lower high bar tomorrow, whatever the high is today. Just let's say it's right now, we've seen the high at 1894.78. That means that there has to be a lower high bar all day yesterday to make a peak C. And then you get your leg D. So that can mean Wednesday at the very earliest I can get my D in the S&P. And I don't really want, although it's underneath the previous high. Oh, let me just make a point about this. My Master Trader Series folks who've done this know, because I mention it so often. While you were underneath a previous major high, peak effort on the 4th of April at 1897.28, you don't have to complete A, B, C, D, because it's underneath. It's in a buy mode, but it's what I call a retracement failure mode. That means it could fail at any time. It doesn't have to. I don't think it's going to, but thinking isn't reality. That says I should really put a great deal more weight on the Dow, but I can't, because there are too many other aspects that are very important. And now we've got one of those aspects that is kind of resolved, and that is that today you got your leg D in the NYA. So am I trying to cut things too fine? Am I trying to be a wise guy? Is this one of those things where you're too clever by half, so you miss out on a fantastic move? Well, theoretically, we'll see. I'll have to wait till the end of the day. Normally, in leg D or E, certainly F is where I would start putting a price. I would start putting in a short position on the index. So I don't know yet. I want to see what happens later on. But I am getting to the point where I'm about to say that on a very short-term basis, time might be running out. That's all. So look at the SPY. SPY went to C. It tells me that I've got to have some patience here. I need to get a D. All right? And I could be wrong. Oh, 189.70 was the high of the SPY on the last move. Today's high is 189.65. I mean, is that frustrating? Is that frustrating? 6 cents makes an all-time high. That 6 cents starts leg C in the weekly chart. That 6 cents does something else. 6 cents? No, 6 cents. And the number 6. And what I'm looking at here is that if it goes to a new all-time high, that has to be a buy mode confirmation, and I should expect at least a D. So, yes, Danny, I did talk about gold. I'll do it again because I touched on it, but I did it in a different way. Right now, what I'll talk about is the patterns. And what I had said, that gold was stuck in a trading range as far as I could see. It's up 11 right now, 12.98. That sounds good, but it really took a beating between Thursday last week going into the end of the week from the highs of the 13.812. Well, let me just check what it was. 13.15.80 highs of last week. Plop, it went down to today's low of 1277.70. So now, if this was at the top, what would I do? You know what I do? I do the exact. Oh, I'm going to talk about that now. I need to talk about it. I do this, and what would it imply? It would imply an inverted Chapman wave stalk leg. So wait a minute, stalk leg. I thought you couldn't have a stalk leg at highs like this. Well, the pattern that I'm looking at in the Dow, right here, just based on the pattern itself, going to a leg E, is so far very strong. If I go to the daily chart in my other format, look what I've done. I drew that circle, and I said, normally you don't get the body of the stalk leg formation. That is strong leg up, leg made up of other legs, but it's a very strong move up. And then it goes into an oval. It must be an oval pattern with, in the middle you get the high, and towards the beginning you get the low, and then you can make a beautiful oval pattern as I've done now, which I call the body. And the difference is that very often it's oval, not just a circle. It goes for a little longer. as it did perfectly in the weekly chart right here. That was a perfect one. And the one before, look, there it is. That's the pattern. You see that? Chapman wave stalk leg formation. We followed that pattern. It did it. It pulled back from the head. It went down to the beak at 15,340 on the 4th of February. And then it had another move up. Here's another mini one. It really does look like it. And if it looks like it, if it quacks like a stork, it walks like a stork, stands on one leg like a stork, I'm going to call it a stork leg. And right now we've got the stork leg, the body, and we've got the neck unfolding right now. And that says that very often E, maybe an F can come about, but the pattern should come back and retest at least the high of this bar right here, 16,620, 60 points, 65 points low from where we are right now, and that's going to be a big test. So that's kind of the way I'm looking at it. So now let me go back to what I was looking at. You remember what was I looking at? Was that the GCM14, the gold contract? Look, it's the same sort of thing. Think of this as the leg. It reminds me of those little ducks we saw yesterday down in Charles River, diving in. So now you've got your leg, which sticks up in the air when the body is here, and the neck goes into the water, and that's the possibility that I think we're going to go to a leg D to the downside in the gold contract. So this is the body. I've got to put it a different way. Yeah, this is the body. So here's the body. This will be the neck. And then we're going to get a turn around. And the neck says when it goes underneath, it should come back. It should go below 1268. I believe that's the number. It should go below 1268.40. And then very soon afterwards, it should come right back and test the body. So that's so where are we, Danny? Yes, gold is still, as far as I'm concerned, looking very weak on the weekly chart, the monthly chart. The daily chart had a very nice bounce, but it's starting to make lower highs and lower lows. I think it's still going to make a lower low and a lower high, and then we'll see if it can bounce back and what happens after that. And that should coincide with the dollar, DXY. The dollar right now trading up. So let me just double check. I think there's a message. Is that a message? No. The dollar right now bouncing, but the dollar needs, and it probably will just go above the, this is the dollar currency index, 79.99. I think it'll go into the 80.10 area, 18, maybe 18.20. If it's able to power through that, that's going to be really important, because then 80.44 is the 200-period moving average, and 80.60 was the last high of consequence back in early April. So the dollar, to me, all this, the currencies, the golds, they're all in a trading range. It's kind of a narrow trading range. Gringo says, down here, ducks don't dive in. Gators pull them under. Yeah, I know what you mean. So that's that. And now I had... Oh, okay. So yeah, this is what I've got. I wanted to do this with all of you. Let me just pull this up so I can see it. And then let me put that back so that I can see it. Here we go. This is the list in Investors Business Daily of their top 50 stocks. I'm not going to go through top 50. I'm just going to go through some of the top ones. GPI. And GPI has been one on my favorite list for a long time, but we've never owned it. It's in the auto parts area. So GPI had a spectacular move on Friday. I say spectacular because it was at a point where it really could have failed. I actually thought of it as a long position. I thought, gee, where's it going to go to? Where's it going to go to when I finished doing my homework after it moved up and I saw where it can go to? It can retest and break above 82.40, and that's the monthly chart. This is Group 1 automotive parts supplier. I just typed in chart supply. I haven't checked that out, but I think they're parts supplier. Look, that cup formation at peak C, and I went through this quite a few times. I believe it is a peak C. The cup formation says that it should go above 82.40 for leg D, and then you've got to be careful. So I want you to just put it together. Look, the weekly chart is looking great. Stochastics at 86%. MACD is good. 91% stochastic at leg C in the daily. I like it on the shorter term. I'm not sure I'd do much more than shorter term. But let's do this. Let's look at AZO. same area. Actually, the leader of the bunch, AutoZone, came back. Peak D held very nicely. AutoZone AZO trading at 539.50, up 3.58. So this is leg A, B, C. I believe that's D. Maybe not. 534.99, 534.95. Yeah, this is leg D. So you can see, as I'm putting the Dow, the S&P, and all these different things together, we're getting close to some kind of a pullback. I'm calling it a pullback now. It could be much more serious, or it could just be a very gentle pullback because there's so much disbelief in this rally. Now it's the monthly chart of the AZO that has had me kind of not on the nervous side because we don't have a position, but I've been wanting to short, and I'm not shorting because of that diagonal move to the downside, which is often very positive, giving a one-to-one bounce, which is doing. I've got to wait for that to finish before considering the downside. Let's look at Orly in the same area. This is O'Reilly. Oh, man, I lost this stuff. Doesn't matter. O'Reilly Automotive. I can't do it this quickly, but let's just say that was A, B, C. Leg C, same as the other one, IPG, GPI. And it looks like it's going to go above 155, 94 for leg D is a good job. At least, no, I shouldn't talk about this if I haven't finished my homework. I think it's leg C. Yeah, A. See, that's why I'm pleased I didn't say anything. Look, there it is. A, B, C, D. All right. So it's a high-level consolidation. And I suspect it's going to fail. I'm just suspecting. But I haven't got a signal yet. So it's on my watch list. Good, okay. Now let's look at the next one. That was not, these two aren't on the list because GPI is. I just want to do the same in the area. C and Q. I don't know if I did C and Q. Did I do C and Q before I lost that data? No, I didn't. C and Q, I'm not going to do that, but it's Canadian natural resources. Oh, I probably should do it. Well, it's consolidating right now after a very nice move. It's trading at C&Q is trading at 39.99 up 64. It's got resistance at 40.50 and must hold 39 support, otherwise it's in trouble. So we're about to wrap up this section for the show that I'm doing for Larry because I can't stay for the final segment. Let me just quickly do this. What we're looking at here is we're looking at the Dow. I'm just going to give you the parameters that I'm looking at. INDU. If today the Dow closes up 94, if it closes, well, it doesn't matter where it closes, it's made a leg E. If it closes towards the high above 16,650, so it's 16,077 right now, that'll be very good action. If it gives a chunk back, then I'm anticipating a very choppy week. And then there's just a nominal new high in the S&P, and then I think I'll be ready to look for. The downside. Most importantly, let's just use the volatility index. Trading right now at 12.29, 40 cents off the low of the day. I think we're very close to an area of support in the volatility index. Doesn't tell you exactly where everything's going to unfold. My suspicion is that somewhere between 11.88, the low of today, and 11.63 to 11.57, so within 30 cents, we should see some kind of sharp reversal in the volatility index. So, folks, you'll probably hear some music or something for 10 minutes, then stay tuned because you've got Daryl Martin coming in. Great shows all the way through the day. I'll be back tomorrow. Don't forget my opening calls, my daily newsletter. We do have long positions doing very nicely here. Check it out. I'll be back tomorrow. Have a wonderful rest of the day.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.